Section 6, Asset and Liabilities. This is page 3 of 5 on the loan application. Before you go in to complete anything on this form here, on the top right corner, you need to disclose, you need to do the right check, jointly or not jointly. In this case, I have only one borrower, so it is not jointly. And I see a lot of loan officers make that kind of mistake that they didn't check that. The software, most of the software default into jointly. Okay, let's take a look at the asset. The asset, what is that the asset? The asset, whatever the liquid asset you have, which is your money. And where do you have money? Money is in the bank account, in saving, checking, CD, and money market, and all that. And also, it has something to do with stock and bonds. It has something to do with life insurance, real estate owned, vested investment in retirement fund, and network in business. You also have to show automobile and other assets, those like furniture and personal property. All right, let's go back. In this case, the example that this individual put down $5,000 as an earnest money deposit to the real estate company. So that's capture $5,000 because that's his money. Okay, where does he keep the rest of the money? It came from Bank of America. You can see we have the complete address there. The reason the complete address is for is when the processor to verify the deposit. Now she or he would go in and would click on certain thing, and the information here will transfer and populate into the right form. And that's why you need to have a complete name and address of the bank. The account number as well, got to have it correct. You know, people may have 4, 5, 6, 7 bank accounts, and you just keep moving. If it's not, then they go to the next page. Okay, now the information you have on here, that you could get it out the check, for example, if they give you the earnest money deposit, so you know the account number. But you need to ask and see if they have any more account number on it. Yeah, so let's move down. In this case, this individual don't have any stock bond. They don't have any life insurance they want to disclose. So basically, they just have the earnest money deposit and the money inside the bank right now. The total is $61,000. This person don't have any real estate, so he doesn't want to disclose anything at all. The vested interest in retirement fund, the network in business, so nothing there. The reason they didn't want to put anything down on the real estate owned because he's selling the property he owns right now. On the bottom, the furniture and personal properties, those, you know, whatever you have, jewelry, the car, I mean, not the car, but, you know, computer, TV, whatever you have for all the furniture there, is $100,000. Now on the right, on the liability, you will see that this is the outstanding credit line that the originator take it out of the credit report. So it is very simple. There's 3 types of credit lines. Number 1 is mortgage. So you understand, you're going to buy the house, that's a mortgage. Now, under mortgage, it's subdivided to 2 things. One of that is just a fixed rate, or, you know, first mortgage. The second one is the HELOC. Sometimes they refer as line of credit. So that's a variable, they got variable payment on it. The second thing is installment. It's just like a car loan that you write a contract, and it's just like one-way loan. You can only pay it down, but you can't take money out. Okay, and then you have revolver, which is, you know, you can put money in, you can take money out. So let's say credit card, you can spend it and then you pay it off. So that's 3 types of line of credits. Then on the bottom, they have a schedule of real estate owned. So in this case, this individual have one house here that he has this house here, and that's how much it is. You know, they just list it out here. And if you have 2 homes, you keep going. You have 4 or 5 homes, and then if you have more than 10 homes, the form just keep on going. It won't stop. Things to remember that on the real estate owned, the limitation is follow. That the lender will limit how many property that this individual put to their bank. Like Countrywide or Chase or Western Mutual, they don't want to take any more than 6 property from a single individual. So that's your limitation. And secondly, that for the investment, that the income you receive from the investment, the Fannie Mae, the lenders only count 75% of it. So this is where the software, they have a little box there that you need to put down 75% rate or occupancy. So it's a 75%. So you need to complete that for the loan application. And that's the end of section 6.